Hello, and welcome to today's episode of 3 Stocks You Need to Buy This Week. I am your host, and we have a lot to unpack. So if you've been following the news, you've probably realized that Bitcoin, Dogecoin, and a bunch of the other cryptos have crashed today, but they recovered pretty quickly. But still, there was a big crash this morning, and while this doesn't have a lot to do with stocks, it has to do with the fact that we are in a very risky environment right now. And because we are in a very risky environment, I thought it would be appropriate to take a look back at some of the picks that I chose. So if we look at Costco real quick, I made this pick back in March when it was at $3.30. Right now it is trading at about $3.80, so a nice little 15% return right there. It got as high as $3.90 last week, but it's pulled back a little bit since then. The thesis remains the same on this one. Price target remains at 400. I honestly think it could go even higher than that, but let's leave the price target at 400 right now and check back on that later. Another stock that I wanted to look at is CVS, and CVS has just been performing very well. When I recommended it, I think it was at 75, 74 around there. And since then it's gone up about 20%. It got as high as $90 this morning, but since then it's pulled back down to 88. I still think that CVS is going to perform very well, not only because everybody's going in there to take the vaccine and they're probably buying other things when they go into the store, because of their huge network in healthcare. They are one of the largest healthcare providers in the US, and I think this is just going to continue to benefit the stock. They also pay a dividend, so that's nice as well. And then the final stock I want to look at is Sony. And when I recommended it, it was at 105. Since then, it's dropped about 10%. It's trading at around 95 right now, because really Sony's been affected by the chip shortage. They aren't able to produce as many PlayStations right now because of the chip shortage to meet demand, which is really hurting their stock. It's going to hurt their sales this year and maybe even at the beginning of next year. But overall, everybody's going to have a PS5 in the next 2 or 3 years. They're eventually going to stop making PlayStation 4 games, and everyone's going to upgrade to the PS5. I mean, if you look at the stores, they still remain sold out at many stores, and it's been about 6 months since it released. They also have that recurring revenue from PlayStation Network where people have to pay $60 every year just to play with their friends. People aren't going to stop paying that, because the whole point of video games is so that you can play with your friends and other people online. So the thesis remains the same on Sony. I think it's even a better buy. And for all the other stocks that I recommended, the thesis remains the same whether they've gone up or down. These are all long-term plays. But now it's time to get into the real reason you clicked on this video, because you want to know 3 stocks that I'm going to recommend to you so that you don't die poor. And as always, we're going to start with the lowest risk stock, followed by the medium risk stock, followed by the highest risk stock. Also in my other videos, I noticed I was saying low, medium, high. Like, that didn't really make a lot of sense, so I fixed that. Alright, so let's get into it. Wait, I forgot one more thing. Don't forget to hit the like button and subscribe. It really helps me out. And the first stock we're going to talk about today is General Motors. And General Motors is that car manufacturer that made your dad's Tahoe or Suburban. But let's look at the chart real quick. It's trading at about $55 right now, and like almost every other stock, it's recovered very well. It hit a high 63 back in March, and it's pulled back to $55. And this company is very interesting because they've basically embraced the whole EV change that's going on in the car industry. They're saying that by 2035 they want all their vehicles to be electric, and in 2023 they are supposed to release their Cadillac Lyriq, which is supposed to be their first electric vehicle to hit the road, and by 2025 the Corvette will be electric as well. And you're probably thinking like, okay, GM, another electric vehicle play, but all the electric vehicle stocks are doing bad. Why should I invest into another electric vehicle company? Well, this is why you need to, because General Motors is not like other electric vehicle companies. They already have their lineup of cars. They're already making sales this year, and they're going to continue making sales of gas-powered cars. They already have a strong stream of revenue. And if you look at a lot of their ratios, like their PE ratio, it's only at 10, which is very undervalued. Right now they have a market cap of about 81 billion, which is about a fifth of the market cap of Tesla right now. And their price to book, their price to sales are all very good. Price to sales is under 1, and price to book is 1.6, 1.7, somewhere around there. So these are all very attractive ratios. This gives us an indication that the stock may be undervalued and that the market still hasn't fully priced in the electrical vehicle play that they will have in the future. They also announced earnings 2 weeks ago, and they reported an earnings per share of over $2. Wall Street estimates only had an earnings per share of $1. So they doubled Wall Street's estimates. That is a very, very bullish sign as well. And like I said, they're going to release electric vehicles in 2 years. So right now is really the time that you want to get into the stock, because once those electric vehicles start hitting the road and people start buying more electric vehicles, you're going to just see this stock pop up. This is a very long-term play. I do think it's going to do very well this year, but I think this is a stock that you want to own for the next 5 to 6 years, just because it has so much potential. It's only valued at $81 billion right now. Once they start releasing electric vehicles and they have all these software updates and other forms of recurring revenue, this company is going to be worth way more than $80 billion. They also have a strong partnership with FedEx, so they are supplying FedEx with electric vehicles as well. This is another stream of revenue that I think is very important to notice, because yes, we all know that GM has very strong brand loyalty. They're the number 4 car company in the world. So the brand loyalty is there. They have consumers to buy their cars, but how else are they going to expand the revenue? Well, with FedEx, they will be supplying them with electric trucks to make deliveries. The company is showing a lot of promise, and it's still very undervalued. You could buy it at a PE of 10, maybe even under 10, because it's gone down today. So like I said, really hop on this opportunity. This is why it's my safest play. So the next stock I want to talk about is Viacom, and Viacom is very interesting right now. So let's look at the chart. It's trading at about $39 right now. It's still 60% off the highs from March when it hit $102 because of the whole Archegos and hedge fund thing that went on. And Viacom is a perfect example of why you should never be over leveraged on any trade, because whether you're buying or shorting a stock or crypto and you feel very confident about it, this is just an example of why you should never gamble with more money than what you actually have. Look at this. It went up in a month from $60 to $102, and then in just about 2 weeks it went all the way from 100 to 40, which just shows you how volatile certain things can be in crypto. And so after this whole mess with Viacom, where it went up very fast, went down very fast, we are left with the stock that's trading at about $40. And I think this is a very interesting time to get into the stock because of the business that it operates in. So Viacom CBS has traditionally been a media company, So they own Nickelodeon, MTV, Comedy Central, and all these other big TV networks. So now that we are seeing a shift into streaming, Viacom has adjusted and they released their streaming service called Paramount Plus. I'm very bullish on Paramount Plus for a couple reasons. I don't think it's going to rival a network like Disney Plus, HBO Max, or Netflix. I don't think that's the market that they're in, but they do have exclusive rights to certain events. So for example, the Champions League. You can only watch the Champions League on Paramount Plus. And this is going to create more competition for networks to really hold the exclusive rights of certain events, certain TV shows. And the reason why I'm bullish on Viacom is because, yes, Nickelodeon isn't as popular as Disney, but they hold the exclusive rights to that. And I know that some Nickelodeon shows are shown on other streaming services like Hulu. What I would really like to see from Viacom is them just kind of doing what Disney did, where all Disney shows are exclusively shown on Disney Plus. I want them to do that with their shows on Comedy Central, with all their shows on Nickelodeon. Make them exclusive to Paramount Plus. I don't know if they're going to do that, but they potentially could. And even without doing all that, they had 30 million subscribers at the end of the first quarter. So it's growing. It's not growing at the pace of Netflix or Disney Plus, but it's growing, and I see a lot of potential in the streaming business for them, especially because they hold the rights to a lot of sports. So I mentioned the big price drop in Viacom, And basically what happened, if you haven't heard, which was that this billionaire over leveraged his position, and he didn't have the funds to really cover his position once markets closed, but he didn't have the money to cover his position once the stock started to sell off. And how it works with margin, it's like, it's not like stocks. Like, if you actually own a stock that's worth $50 and it goes down all the way to $2, you aren't going to be wiped out. You just lost $48. But if you're over leveraged, then and a stock goes from 50 to 2, you actually end up owing your broker money, because you didn't just buy $50 worth of stock. Since you use leverage, you probably bought more of it. So you owe whatever the losses were from that, and probably a little bit of interest as well. So Billy Wang, the brilliant billionaire who thought it'd be smart to over leverage his position, ended up owing all these banks money, but obviously he didn't have it. So this has just caused a lot of negative sentiment around Viacom. People don't really want to touch it, and I think this brings in a perfect buying opportunity, because yes, the stock shouldn't have gone from 40 to 100, but I do think it deserves to go from 40 to maybe around 60, 55, somewhere around that range. So that's my price target for this stock. And for the reasons I said, they own some of the most popular networks in the country, and so it's going to take a while for it to move up, but it's fairly valued. They have a PE of about 10 as well, and price to sales are 1. It's doing very well. Great stock to own. And the final stock that we have to discuss today is PENN National Gaming. So PENN closed right now at about $77. Let's look at the chart real quick, and you'll see that it had a high of about 142. Since then, it's gone down almost 50%. So why has the stock gone down from 142 to 77? Personally, I have no idea. What I do think happened is that around mid-March, a lot of stocks were hitting new record highs, including PENN, and I think this was around the time of March Madness, and when it also announced that it was going to be included in the S&P 500. So I think a lot of investors got ahead of themselves. They just ran up the price all the way to 142, and the market basically just said, yeah, we're not paying 142 for this stock. So it's plummeted ever since. And I think this brings in a great buying opportunity. So if we look at the stats real quick, they have a forward price to earnings of 36, which is the highest of any stock that I spoke about today. Their price to sales is about 4.6 right now, but their forward price to sales is 2.5, which I really like. So the forward price to earnings seems kind of high, but the forward price to sales seems pretty attractive. So this is why I'm including it as the riskiest play. So on the one hand, they are increasing their sales and they're doing a very good job of bringing in new consumers. But on the other hand, they're not really making a lot of money. So what I mean by that is, yeah, they're bringing in a lot of sales, but that's not really converting into earnings. They have a lot of expenses to attend to. They have a lot of debt, so they have to tend to those things, and that really dilutes their earnings. So what do we really make of this? So 2 weeks ago, they reported earnings, and they doubled Wall Street's estimates, which is also a very good sign. So we have that. Also, we have to mention their partnership with Barstool and Dave Portnoy. And that man is a genius. Like, I follow him on Twitter, and yeah, he says a lot of silly stuff. But at the end of the day, when he promotes something like Barstool Sportsbook on Twitter, on Instagram, whatever it is, people are listening, people are liking that, they're retweeting that. And that's a very encouraging sign for me, because what I've noticed about PENN as compared to their competitors like DraftKings, FanDuel, is that they spend very little on marketing and advertising expenses in comparison to their competitors. And I think a lot of that has to do with the fact that Dave Portnoy is out here, just doing his thing on social media and really promoting Barstool Sportsbook, which is bringing in a lot of new customers. And really, the other companies don't have someone like that. They don't have a face that everybody knows. They don't have somebody who can just go on social media and people will follow them into whatever decision they're making. Even with the SafeMoon thing that Dave Portnoy did a couple days ago, where he basically made a big announcement into one he was going to invest in, and he chose SafeMoon. Even that, it's like he straight up told people, yeah, this might be a scam, but it's a risk I'm willing to take, and people will follow him into taking the same risk that he's taking. It just shows you the power and influence that he has with his supporters and his followers. But one of the risks with PENN is that they don't lead in market share. So FanDuel and DraftKings tend to have more users than them, and MGM is catching up. But I don't really think that this is that big of a risk because more and more states are legalizing gambling. So I think there's going to be enough room for, a few players in the casino gambling industry to really take the lead and take most of the market share. I think PENN is going to be there with the top companies if they continue to market through social media, catering to a younger crowd. Because as more states legalize gambling, there's going to be more revenue, there's going to be more growth opportunities. So they don't really have to be number one right now. Plus, they also cater to a younger crowd. So as more people start gambling from their phones and that becomes more mainstream, I'm sure that they'll do just fine with Barstool Sportsbook. Also, I really like how the price has gone down about 50%. I think this brings in a huge buying opportunity. It might go down before it goes back up, but ultimately my price target is about 120 with this stock, over 50% return if you buy in at 77. With more growth opportunities, more states legalizing gambling, and Dave Portnoy attracting new consumers, this stock will be just fine. There you have it, guys. These are my 3 picks for this week. Also, don't forget to hit the like button and subscribe, guys, and comment down below. Let me know if you think that I'm right or wrong. Let me know what you think about these picks, and let me know if I should cut my hair or not. And remember, I'm not a financial advisor. These are my opinions, so invest at your own risk. These are my opinions, not professional here. And yeah, I'm gonna see you guys next week. Enjoy the music.